42 points down, marginal recovery, but it's been in this range for the last half an hour since the time we've started the 230 factor. So not much to actually read into this space. Mid-cap, small-cap index, a marginal recovery than what we had seen earlier. It was down about 0.8 odd percent as far as mid-cap index is concerned. I think that index has taken a slight bit of recovery. But again, it continues to be in red. Advanced decline has not improved that much. It's just names which were on the lower side have now started to slightly be off the day's low. We were talking to Avinnash. He's still with us. Avinnash, what's your view as far as Tech Mahindra is concerned? In this full downside that we've seen, that's one name which has not fallen. You think sellers are behind and probably, now valuations are comforting for any investor?
No, I think from a longer term perspective, Pankaj, their problem was that they took over LCC, which actually compressed the margins in the previous quarter. And I think maybe for one more quarter, we could see some margin pressure. But going forward, the management is quite optimistic that hopefully in FY17, they could see this subsidiary actually contributing to the overall EBITDA. More importantly, I think from the telecom vertical, it is one of the few companies which has got now a large exposure to the telecom market, which is non-BT business and which has been growing quite aggressively. So I would suggest that, at the current levels, looking at the kind of order book visibility which they have, the kind of margins they have, even if they maintain the margins, my sense is, the stock looks pretty attractive from a slightly longer term point of view. Maybe in the short term, there could be some volatility in the coming quarter as margins would definitely be a little compressed till the time, the subsidiaries don't stabilize.
Are you overall bullish on IT or Tech Mahindra is one exception?
No, I think IT definitely as a pack definitely looks attractive because I think, one thing is if the US economy does, show a fairly healthy traction, you're going to see a good kind of bounce in the dollar. And more importantly, with the rupee kind of depreciation, some amount of benefit is going to spill over to the IT companies. And my sense is, I think, valuations for most of the IT companies, if you talk about Infosys or HCL Tech, TCS is slightly fairly valued. But I think all these companies have got fair amount of, revenue visibility. And I think margins would definitely be sustained. In fact, if they don't improve also, I think valuations look definitely good.
What would you do, for a name, like Just Dial? Now, it was up about 14-15% yesterday. Right now, it's flat. They've launched an app. Do you think it's too late, or it's just providing some relief that they have upgraded their model and probably things would be better from your own?
No, I think Pankaj, the stock saw a pretty sharp bounce, once the the app was launched. But I think if you look at the basic core business of the of the database business, that is something which is now going to face a lot of headwinds because we all know that I think data search is one area which possibly is not going to grow that faster, and that's the reason they now.
And even if it will grow through web.
No, it will definitely because it's not going to happen that everybody goes to Just Dial and sees what he wants. So the internet, the Google is definitely there to help out. But most importantly, in terms of valuations, Pankaj, I think this is a stock which still trades at valuations of more than 70 odd times. So I think to pay such a high valuation for a company, for a business which is not going to grow, at least the core business, I think one should be a little careful because again it's part of the F&O list. So there's a lot of volatility on the counter. But my sense is there are many more companies where earnings growth are going to grow in excess of 40-50% and which are available at 10 to 12 times P multiple. So these are classic cases where you can actually build value over the next 2 years rather than building something on a brand and which is already very expensively valued.
Actually, this is a classic case of saying that the names that people like, they continue to value them highly despite or probably the trust factor continues to be very high.
No, it could be. I mean, definitely, brands are always the starting point for a good business. But I'm saying at the end of the day, I think, giving a multiple of 70 or 75 odd times, I mean, definitely increases the risk. In case there is any negative earnings surprise, Pankaj, these kind of stocks get beaten down very badly because obviously the market will not like any negative earnings surprise for a company which trades at these kind of high valuations. So I would say that, it's better to be a little careful because if there is a negative earnings surprise and, this app which they have launched, is obviously not going to deliver in the very first 3 to 6 months. It's going to take some time. They have spent a decent amount of money on it. So obviously some amount of amortization and some amount of costing pressures will be reflected in the initial first 2 quarters. So it's not going to be a very big blue sky initially. Maybe if it does succeed also, we could see bigger upside only in FY17.
So wait and watch.
Yeah.
Right. What would be your view on Bharat Forge? Now, that's a name again that was starting to trade in that high zone area. People had started to build a brand out of it. Numbers in Q1 were not that great, and now you're getting news flow that maybe the demand globally may not be that good. You think again that's a name that you would want to avoid despite a 25-30% correction that we've already seen?
No, I think I would prefer to wait and see how the management actually talks about what is the outlook for the US truck markets. Mind you, Bharat Forge is a very large supplier of automotive axles, which is basically a very large kind of product they sell in the US truck market, and where they have a 25 to 30% market share. So any downturn in this market would definitely hit their volumes. And I think in the last 2 to 3 months we have seen that class 4 trucks which they have meant, these truck sales have actually seen a negative growth.
That's one part. But now people have started to say their non-auto business may also not do that well, because of what's happening with the commodity prices.
I think clearly, the domestic business is going to be the only savior for them. I mean, the non-auto business is definitely not going to be that profitable if there is a kind of slowdown, or maybe, if there is a kind of a, order pickup problem. But more importantly, from the auto space, Pankaj, I think this is one company which you cannot ignore because of its sheer size. They are present on the commercial vehicle, on the tractor side, on the passenger car side. So clearly, let's wait and watch. I think if these stock price trends depict the fact that possibly numbers are also going to be weak, earnings are going to be cut, then I think that would be a little more concerning. I think typically the second half for Bharat Forge is supposed to be much better. So I mean, let's wait and watch. But I think around 900 odd, maybe the stock could possibly see its worst kind of support. So I don't think the kind of fall you are seeing today is something of a kind of a big crisis, although it's a matter of concern.
So 5-10% or maybe a 10% fall from here on would make it a decent buy.
Yeah, I think I would definitely look at it from the fact that the kind of managerial capability and the kind of vendors which this company works, maybe it may be a Volvo or a Mercedes or typically even a Bosch. I mean, my sense is, I think all said and done, I think a marginal dip in earnings could come in, but how the management reacts, and clearly they have the management capability to actually come out. So I mean, let's wait and watch. It's not going to be a complete end of the story for Bharat Forge.
And even even if it has to recover, it's not that it's going to recover overnight. So it'll take some time. So you'll get your time to study, keep it ready, and then when you get an opportunity, enter. And that should be the strategy for Bharat Forge.
Yeah, I think if it gives you an opportunity to actually wait for some time, and probably the price also doesn't go up, I think eventually, markets would look at FY17 as a kind of a trigger point. If something has gone wrong in FY16, I'm quite sure that the markets would definitely look at the fact that if not this year, then at least FY17 the earnings trajectory goes. I think if you look at a stock like Bharat Forge, markets are looking at a 20 to 22% growth overall, over the next 2 years. So I think in that scenario, we'll have to see whether this is a marginal kind of one-time dip or it's going to be a bigger problem.
How would you, look at a name like Treehouse? We've spoken about it earlier. It's, I think, fallen from there as well. Do you think it's now at 350 or 340 around a compelling buy? What's the view over there? And does the story still continue to be intact? High free cash flow company, high ROE company?
Yeah, I think, Pankaj, definitely, I think from the education space, this is one of those companies which has been very significantly liked by the FIs. I think almost 43-44% is held by the FIs. They made a QIP at around, sometime last year for 200 crores at a price of 440. So you're getting the stock at a pretty good discount from the QIP price, about 18-19% down. And if you talk about the earnings, last year on a top line of 200 crores, they made a bottom line of around 61 crores. So I think definitely if longer term, this business will definitely show good rewards. I think they are one of the largest branded pre-school players, and more importantly, they are now started offering daycare services. So I would suggest that somebody who has got a long-term vision and a long-term time window can definitely buy in now. I think there's definitely good amount of money to be made, from a longer-term point.
Any other names that you like from the mid to small cap space which have corrected, but the earnings thesis are still intact?
I think from the wind energy space, Pankaj, we like Inox Wind. I think this is one company which does not have to bother about domestic cyclicality or maybe the currency factor. And more importantly, if you see the business model, they are sitting on a 1300 megawatt capacity, and again very strong ROE of almost 29%, return on capital of 23%. And I think next 2 years we could see earnings growth of almost 50 to 60%. And if you look at the earnings for current year and for next year, that is FY17, the valuations for FY17 are not more than 11 to 12 times. So I think definitely here is also one opportunity where probably the stock has not reacted positively, but this is a very robust business which can give good rewards over the long term.
Right, Avinnash, thank you so much for joining us here this afternoon. Hope you have a great day going ahead. Always a pleasure talking to you. That was a view coming in from Avinnash. Names, as always, from the mid cap, small cap space, something that he tracks quite closely.